Okay. All right. Um, Hello, everyone. Welcome. We're going to start now. Um, okay, we're live. Oh, now I can hear myself. Okay. Hi, everyone. Welcome. Thank you for joining us. For those standing in the back, feel free to take a seat. Welcome to the session on decentralized energy infrastructure and the opportunity around also decentralized finance to scale up. So we have a hybrid event. We have the team here in the room and a few panelists on the phone, on the screen. But before we actually kick off with the panel discussion, I'd like to invite Laurent Longuet from Suraj, Siraj Power, to speak to us a little bit about the opportunities around distributed renewable energy and distributed climate projects.
Thank you. Good morning or good afternoon. It's a pleasure for me to be here. I'm sure from the accent, some have identified I'm French, but I'm very happy to be on the UAE pavilions today to give just a short introduction to this panel. So first one is you have heard probably a lot already today and during the last days about utility scale projects and large solar farms and CSP projects and etc. What we are talking today and in this panel is a bit different. We are talking about decentralized infrastructure. So what is decentralized infrastructure is basically what's not utility scales when talking about energy. So it's about producing, as you can see on this slide, it's about producing energy from solar panels installed on the roof, installed on a carport. It's about producing cool water or refrigeration for distributing to some buildings. It's about creating some local infrastructure where you produce energy and you use this energy to charge electric vehicles, or even you can use the electricity from these electric vehicles to power houses. It's as well what we put in decentralized infrastructure in general. It's as well about wastewater management system. When you talk about highlands, villages, and communities, it's about energy efficiency, how you can improve on a local network, how you can improve the way the energy is being used. And it's all together. It's all together as well. It's a way to connect all these technologies together to get the best out of it. So why are we interested in infrastructure, in decentralized infrastructure, and why we believe it's important and the potential, and why this panel? It's very fast to deploy such kind of technology. It's rely mostly upon private initiatives. You don't need large government tenders. You don't need governments to put plan in place. You need a regulation, and you need the private sector to enter in. So it can be very fast. It is very fast. The second benefit, it reduces as well. It helps reducing as well the need to develop large infrastructure. You don't need to increase the size of your transportation network for countries having already such infrastructures. And in countries where such kind of transportation network, especially for electricity, does not exist, you don't need necessarily to put $1 billion into developing it. You can do it, you can produce and distribute electricity in a more local way without this large infrastructure. Of course, it involves proper regulation, and that's a topic. We are all well aware about it, because electricity sector, about charging vehicles, it's generally a regulated sector, and that's where, if I take the example of UAE, we are blessed having now for more than 7 years a regulation in place allowing us to develop solar system in a distributed way, especially in Dubai, now in the rest of the UAE. In terms of potential, it's massive. If you take the example of a country like Germany, which is not a small country, today more than 50% of the renewable energy is coming from distributed. So although individual projects are small, it can be a massive amount of projects, a massive amount of energy produced and generated by this distributed system. And in terms of capital, it's a lot of capital and investments which are needed. And that's the reason why talking about how to finance such decentralized infrastructure are essential. So now, there are some specific challenges when it comes to financing to the financing of decentralized infrastructure, and this is the topic of this panel to show that there are solutions. But what are these challenges very quickly? So when you do decentralized infrastructure, you do not a single large project for which you look for a single financing solution, but it's multiple projects, multiple small projects which you cannot finance individually. So it involves a portfolio financing. You are only capable to finance if you do it at the portfolio level. That is very specific. It's as well in terms of how you build your portfolio. You don't do it at once. You do it year by month after months and year after year. So it means that it's not a financing that you do at once in terms of timing, but it's about batches. And again, that's a challenge. It's a B2B business as well in general. So your off-takers are private companies, schools, real estate developers. They are not governments. So in terms of bankability of the off-takers, it's as well a challenge which is particular to this industry. And finally, there is a technical challenge in the sense that when you go for financing such kind of decentralized infrastructure, it is generally involving more than one technology. It's multi-technology in working together, and it makes such kind of projects more complex technically. So it's as well a challenge, and it requires a technical expertise. So that's just very briefly to explain about the interest of decentralized infrastructures, its impact, and what's special in financing such a projects. And I will leave now the floor to the panelists to explain you how this can be done.
Thank you.
Thank you for your
so much,
attention.
Laurent. And I hope you'll join us here
Thank you.
as well. I think that was a terrific sort of level setting of what are decentralized climate and energy projects and what are some of the biggest challenges. So as we get into it, we have a terrific panel here, and I think sort of represent the entire value chain. So first, from a developer perspective, we have Nabil Kamoun on video from Karm Solar, so an Egyptian renewable energy developer. Then we have the financing players represented both here with David Orio from Creek Capital in the UAE, and we have Nicolas Thévenot from Apicorp on video as well. And then lastly, we have two leading decentralized finance platforms who have joined us. We have Eko Yanka from Realport, operating in Europe, based out of Germany. And then we have Marco Balak from Dextar. So, what I hope we can cover today is both some of the unique challenges and solutions around distributed renewable and climate projects, but then how new blockchain technologies and decentralized finance can start to address some of those pain points, and where are we seeing that shift happen. So first I'll start really on the financing side, just given your experience with funding a number of projects in the region. And David, we talked about this a little before, and Laurent shared a number of the key challenges, but when you think about what's unique about distributed or decentralized energy and climate projects, what are the biggest barriers to getting those financed? What is real risk versus perceived risk from investors? And how have you been able to solve some of the challenges with just what the projects you've financed to date?
So thank you, Kate. I don't know if you can hear me. Yes. Okay. So good afternoon, everyone. So we've been able to solve some of the challenges, but not all.
Yeah.
Okay. So but let me list some of the barriers that we have. So the first one is actually connected to what Laurent said before, is the B2B market. So here, like our clients are, people from retail, from logistics, like all of them, like not being necessarily educated for infrastructure in general. So when you try to access to financing, you have some necessary ingredients that you need to put into the contract to make sure that you will be bankable and you'll be able to talk to lenders, like one day or another.
Yeah.
And this is where, the first challenge lies, to make sure that you come with a contract agreement which is sufficiently simple for the clients to understand, which is outside of their core expertise,
Yeah.
but sufficiently robust for the lenders, to lend us money later on. So that's, probably like one of the first things that needs to be tackled is to make sure that we have the bare minimum, and I'm probably Apicorp will talk about this, ingredients. And ingredients are like all about bankability. So we need some assignment clause. We need, some step-in rights, because financing parties are part of the agreement
Yeah.
or will be part of the agreements. And this is part of what we do to educate and to explain to our clients why those agreements are like that and why they cannot be otherwise
Yeah.
if we want to get access to finance later on. So I think this is a hard sell for some clients. This is a less hard sell for some others, but I think this is the first, barriers that I would say. The second one is around risk. Here's like we're trying to assess the credit risk of our clients. And here again, this is not sovereign risk. So this is, risk of, commercial or industrial clients for which, we still do not have the tools or the agencies to help us to assess those risks.
Yeah.
And I think that this is where, we come up with some imperfect way to measure the risk at the client's level, but also even more imperfect to measure the risk at the portfolio level.
Yeah.
So this is where, another barriers that we're trying to overcome by trying to engage with credit agencies, trying to talk with lenders that also help us, to define a number of criteria that we need to meet in order to be to make those clients eligible for the financing. So that's probably the two barriers, but the other barriers is probably coming from the banks themselves. And all of the commercial banks, at least in the region, have shown little appetite for the moment for financing, decentralized infrastructure. And there's several reasons behind that. I think one of the reasons is probably the complexity of financing this.
Yeah.
As opposed to financing a bigger project. The second complexity, I think, or reasons to explain why they have a less appetite, to support us is probably the size. So today, the decentralized, infrastructure market is still relatively small, and of course, people wants to lend big money, and they want bigger tickets, to come in. So that will be probably some of the challenges that we face, and we're trying to address some of them. So every day we grow bigger. So there will be one day where we'll be big enough, for some banks, and then for maybe international banks at the same time. So that's really the main challenge that I have in mind.
Yeah, thank you. And I think that is a good opportunity to actually turn the conversation to Nicolas from Apicorp, because as a multilateral development bank that has been increasing its renewable energy investing in the region, would love to hear from you. Given what David shared on the challenges of recruiting in large institutional investors into distributed projects and project portfolios. How do you perceive sort of the challenges and also the opportunities to invest in decentralized portfolios of decentralized projects? And also, what do you observe about the purely commercial capital players and what is holding them back?
Yep. Thank you. So I fully concur indeed with David about all the challenges faced by financiers. And as far as Apicorp is concerned, we got interested in this transaction, although we were aware of all the difficulties even before we started, because we looked at the bigger picture. And the bigger picture was telling us that distributed power is definitely a very important instrument in order to decarbonize the industrial and commercial activities in the region. And not only it's a powerful tool for that, but also it is bringing so many benefits. And I could name some of them. You see, clearly it enhances the competitiveness of the businesses because they have access then to a cheap cost of power. It's definitely also helping to the environment by reducing the impact of commercial industrial activities. And last but not least, it is also allowing governments, in fact, to switch from a subsidy type of model to something that is definitely far less costly for them. In fact, they benefit from it. So looking at all these elements, we felt that beyond, you see, this project itself, there were so many benefits that such kind of business was offering to countries that we were very much ready to embark on the journey, despite the challenges. So if we look at the challenges, in fact, the challenges are quite obvious. You know, it's particularly in this region, and I think this region it's important to focus on the perception of financiers in this region. When financiers in this region talk about power plants, they talk about, you see, large utility scale power projects that have one off-taker who is quite often backed by a Ministry of Finance guarantee.
Yeah.
So you can imagine that we are very far from that, you see, in the context of disputed power. You have multiple off-takers. We will not call them off-takers, but leases, you see, so this is one. And secondly, they are not backed by anything. So eventually, it's a completely different approach that has to be taken, and this is why commercial banks so far have shown a lot of reluctance to that. As far as APICORP is concerned, and talking about this issue of the creditworthiness of clients, it was even trickier because we are dedicated to the financing of the energy industry. And eventually, although we are financing energy projects, eventually the risk we had to look at was completely different. In fact, it was about what? It was about all kinds of sectors, particularly logistics. You see, could be real estate. So really, in fact, sectors we were not that much familiar with. And this was a challenge in itself in order to build an understanding of each of these sectors. The good thing that happened, I should say, although it may not be looked at that way always, is that COVID-19 was an excellent test. You see, stress test, I could say, to witness to what extent, in fact, the clients of Siraj were resilient enough to go through successfully. You see the downturn that occurred during this year and a half.
Right.
And for us, it gave us a lot of comfort, I have to say, because we could see a lot of resilience. So eventually, it shows also that when the clients are properly selected, then I would say that the credit risk is reduced. However, and I will finish on that point of the creditworthiness, however, we have also to consider that we are talking about a long period of time because the financings are above 10 years.
Yeah.
So, and obviously, having or taking a view on businesses that are quite often privately owned for such a long period of time is difficult.
Yeah.
If not impossible. And this is why it's always important when you constitute that portfolio to accept also to consider a gearing that is relatively low compared with what would be the gearing, for example, on a utility scale project. In fact,
Sure.
the gearing on a utility scale project, you are talking about 80-20 or even sometimes 85-15. Obviously, this is not the case in terms of giving for such kind of business that is at best 60-40. So these are the few points I could share with you on this matter of creditworthiness.
Yeah, thank you. I think that makes a lot of sense. I mean, to your point, a decade from now, when we have massive portfolios of distributed, renewable, and other climate projects, and that kind of track record, it'll be a lot easier to attract the capital. But we don't have time, right? And so we need to find ways to accelerate capital into distributed projects. I also take your point that large utility scale projects, you might get 80-85% debt financing in the capital structure, while in distributed portfolios, it's often a lower portion of debt, just given the risk perception.
Exactly.
Before we move into the opportunities around decentralized finance, I'd love to hear from Nabil from Carm Solar, just the perspective of actually developing projects in Egypt. Egypt has some big goals around 42% renewable energy by 2030, and I believe has made some recent policy changes to allow for net metering and self-consumption. So Nabil, would be curious to hear, especially around distributed projects, how have you gotten those projects financed, and what you've learned in the Egypt market?
Thank you for the question. Actually, I want to give some feedback, some background about Carm Solar first. So it's a vertically integrated solar utility company, and the company was founded in Egypt in 2011. And basically, the business model is capturing the entire value chain of electricity generation, distribution, and as well management. Egypt basically is strongly supporting the renewable energy sector. We saw that expressed through the time, through many legislation, and one of the main one was in 2015, Law 87, which encouraged the private sector participating in the energy sector. Carm at that time was the first mover, and by developing sound business model, the challenge was to raise funds at that time. So the bank was not really having the appetite toward financing such model or such sectors. It's new. So basically what Carm did at that time is to go to unconventional financial institution like SFD, the Social Fund for Development. And this is where we initiated the pilot and used it to leverage as a pilot and demonstrate to the financial industry, or I would say to the bank sector, okay, to show that these projects, how they are potentially profitable, that we have the ability to implement, and we show the capacity of the company and basically what can that project bring to the industry. So from there, Carm were able the year later to finance the first project of in Egypt for net metering PPA, and that at that time it was through a bank, and it was successful for us. And then we took it forward until we financed the biggest project of PPA net metering in Egypt. It's around 20 megawatts, and that it was 2019.
Great.
Of around 300 million EGP at that time. So overall, it's challenging, but the key is to build a sound business model and navigate through all the constraints that we may face or we may have. And that's it's now today we clearly noticing that the bank sector or the financial institution here in Egypt, they pretty master basically the industry, they understand it, and those they don't, they are investing on it heavily to understand, to spend time with developers, with a company like Calm Solar in order to support their growth.
Great. Well, it's great to hear that at least in Egypt, banks are getting up the learning curve and have more appetite for this investment profile. I'd like to turn now to sort of the other key topic we have today, which is around the opportunity for decentralized finance. And I'm wary of the fact that, using cutting edge technology like blockchain, oftentimes we need to demystify this a little bit. So as we get into this with Dexstar and Realport, I'm going to ask our colleagues here to make this real for us and share some examples either that your company has executed on or others in the market to bring to life the use of distributed finance for decentralized renewables. And obviously DeFi has become increasingly part of the global financial ecosystem, and there's a lot of hope that that it can be really a tool for addressing some of the challenges we've talked about here today around rapidly financing distributed renewable and climate projects. So maybe first I'll start with Realport. So Echo. Wondering if you can just share a little bit about what your company is doing and some of the larger trends you've seen in Europe around using decentralized finance for renewable or climate finance.
Well, first of all, thanks for having us here. So yeah, Realport, we are a smart contract-based investment platform, and we power smaller institutions, pension funds, family offices, churches, etc., to gain flexibly and also efficient exposure to renewable energy assets and sustainable infrastructure assets as a whole. And these assets are usually not or hard to access for these type of investors, and as such, we use our securitization platform in order to fractionalize assets. Most of the times, they are either co-investment positions. They can also be secondary positions at fund or project level, which we aggregate within a SPV position, and then essentially use the same technique as you would in a traditional securitization. However, we use smart contracts in order to digitize the securitization process and enable investors to take smaller positions, which they can also, in the end, trade on or divest on our platform, to put it correctly. So some of the trends within renewables and decentralization is very, very difficult to say, just simply because it's such a new and recent trend. But it's clearly a trend coming. But I want to probably highlight a couple of topics which some of the players are grappling with. Number one, we're seeing, due to the high energy pricing, especially in Europe, extreme volatility, which is making it quite difficult for all parties, for all counterparties to really understand the value. And as such, we're seeing a move to rather short-term PPAs going forward. That's something which is really interesting to see, and depending on how long the volatility will last, we are anxious to see how the market will react and adapt towards that. And actually speaking, interest rate environment is also something which is impacting overall the overall renewables market in a tremendous way. All of a sudden, sovereign debt is an option again. That means institutional investors, which for the past 6-7 years have loved to plow and to invest within renewables just because of its green credentials, but most important because de-risk utility scale wind and solar have been a great, stable, low-risk investment, which would rival fixed income, sovereign fixed income. This is changing now, and this will also upset the entire the entire makeup of the industry going forward. And then, last but not least, we see a lot of volatility also due to the supply chain issues and to inflation. Some of the two major macro topics which are impacting renewables significantly. Supply chain, in the sense that a lot of projects are being delayed and not coming to market as early as we like them to be. This is causing troubles with investors and issues with investors. And inflation, it's anyone who's built a case on an asset or on a portfolio of assets where they are banking on lowering the O&M, so the operations and maintenance cost going forward, I think are being caught on a wrong foot. As operational maintenance costs are increasing. There's so many more trends which impact the entire renewable industry, and therefore also the way how we can provide access to, let's say, smaller institutions in order to help to mobilize capital for the energy transition going forward. This is more prevalent, especially when we're talking about wind and solar and other assets which are to be launched in the market, such as storage, battery storage, hydrogen, etc., etc.
Thank you. I think one of the points I take away from what you've said is that while distributed finance can really, unlock certain aspects of what's holding the industry back, obviously the fundamentals are still there, whether that's supply chain challenges, inflation, the quality of the assets still need to be at a certain level in order for a portfolio to be successful. Marco, if I could turn to you and your perspective from Dextar, just if you could also say more about how you see tokenization addressing some of the challenges we've talked about today in terms of being able to crowd in more capital faster into distributed projects, and how you've seen traditional finance institutions react to this.
Sure, absolutely, and thank you for having me here. The point is that allocators in the space want to allocate to these types of projects and don't sometimes have necessarily a means to do it. And we have this concept that's evolving of real world assets on chain, right? In having something like debt being deployed on a protocol. So what Dextar is doing is that we're a permissioned DeFi app that's offering an online marketplace for debt between lenders in the crypto space or other and owners of sustainable projects. So therefore, owners of sustainable projects can tap into DeFi and crypto markets that have so far been seen as very volatile in some cases, but be able to give that, let's say, resilience of a real world asset. Now, it's still very early days in the technology itself, and this is still evolving. And traditional finance might take a very, very opposing stance because there's a certain degree of regulation that needs to comfort the funds, the allocators, and we're going to see this space really evolving. And namely being that you need to be able to experiment to put assets that are off-chain, on-chain with their various properties and being able to leverage blockchain technology and the information that you can put into a smart contract. So we're still in a space where to be able to do something that's been done in a certain way for it to come on chain and use the power of DeFi is going to take some time. But with the proper compliance channels in place and the regulation, this will evolve over the years to come. But we need to be able to experiment and to try new things in order to work with the current way the world is set up.
Yeah, well, I think that's a really good point. That even if the technology is there from a blockchain perspective, and that is a global resource, there is still some realities that are local in terms of getting DeFi solutions off the ground. And so I understand, Creek Capital and Siraj Power are working on sort of a first of its kind decentralized finance solution for sustainable assets in the UAE. And would love to hear from both of you more about that. Sort of tell us about the implementation of that initiative. How do you partner with local regulators to ensure that you can quickly scale that up? And what is the appetite for putting real infrastructure assets on blockchain in the UAE?
Sure. So in Creek Capital, we like to be innovative. Like to be at the forefront of new things. So and I'm happy today that we could give a voice, to these DeFi, platforms. For I think for the very first time, I think that we associate, DeFi with, distributed energy. And again, there's a long way. That's clear, but there's a way. Yeah. And we want to be part of that journey. And at the moment where digital economy is at the very high in the agenda of the UAE. We want to be, the people that will contribute. We are the people from the real world to contribute, to try to make, all of these different parties to talk to each other and to make sure that with the help of the government, the proper regulatory frameworks are being put in place so that, the smart contracts could have a reality, a value, and then, investors can have, certain, protections and security, behind those new platforms. And again, this is a capital game that we are in. So, we are happy if we can, to open a new door to access, new capital. And this new capital is everyone, this is really how to democratize, the access to financing for renewable assets. Yeah. And there's a long way, but with the help of Realport, of the help of Dexter and many others, I believe that we can connect the 3.0 world to the real asset world. Yeah. And I hope that it is not for this to happen in not too long. Yeah. I think.
Thank you.
You're welcome.
Laurent, anything you'd like to add?
No, I think it's very exciting for a developer like Siraj Power to hear about from traditional banking systems and from more innovative or new sectors that solutions are being put in place, because we are extremely optimistic. We see the interest in the whole region for going solar, and we strongly believe that decentralized solar energy is what we do essentially in Siraj as a huge potential, but this huge potential will only be capable to deploy as long as we have sufficient capital to do it. So it's great to hear from what we have heard today about these solutions. So.
Great. Well, as we started a couple minutes late, I'm actually going to take just a couple more minutes for one last word from each of our panelists. It makes me sad to not get to hear more from all the voices. And so I'm going to ask you to be incredibly brief and just share if there's one thing you'd like to see happen, either by a specific stakeholder or by the industry overall. What's the one thing you'd like to see really in the next few years, not to keep our sense of urgency? So for the sake of people not talking at the same time, I'll start with those on the phone. Nabil, what is the one thing you would like to see happen in the Egyptian renewable industry to scale up decentralized projects?
Actually, and thank you for the question. Actually, to align to what David was saying, I mean, is really to have a better mature market when it comes and ready to absorb such a new solution when it comes to tokenization and blockchain technology, and offer to the consumer the possibility to potentially trade and buy the future consumption. That will be like a solution for us and for many other companies to have a new source of
Sure.
financing.
Yeah. Yeah. So really democratizing and allowing individual citizens to participate, right?
Absolutely.
Yeah. And Nicolas, what would be your one wish?
Well, back again to the assessment of the clients and the contracts that are, to a large extent, I would say standardization would be key. So standardization of the contracts, and we should include also kind of mandatory, I would say, a mandatory level of information, particularly on the financial, because at the end of the day, having to deal with a diversity of clients, it's okay, it's manageable, but when the information is not there, when the contracts may vary from one client to another, then it's becoming far more cumbersome. And from that point of view, standardization of contracts and having the clients to have, in fact, to benefit from systems put in place by the regulator.
Right.
You're having to provide a certain degree of information. This, I think, is a must in order to see a real expansion of this business.
Great. So transparency of information, standardization of contracts to really streamline. Great.
Exactly.
Okay. Thank you. And Echo, would love to hear from you.
Yes, so I would have to say, and it's probably the most boring of things, but it's as government and regulation plays such an incredible part in terms of driving energy from the build out of renewables, and in particular to decentralize off-grid energies. I do think that governments really need to think about creating some sort of a facility to underwrite the credit risk, huge portfolios. I think that could significantly boost and drive the build out of financing structures, and also the build out of decentralized solar, rooftop solar, and so on and so forth. And at the same time, looking at holistically, permitting is a huge topic as well.
Yeah.
Also to be driven by the governments. Need to get much quicker, better, more efficient. That needs to be digitized, to be quite honest.
Yeah.
And we're not there yet. So I do think that's the biggest bottleneck, and I think for the next 2-3 years to solve these two topics.
No, thank you for mentioning that. And it's not just, it could be, government facilities to incentivize projects and financing, but it's also the local municipal institutions that have to permit projects and all the rest that slow things down. Marco, a final word from you?
Yes, absolutely. I believe that having more market participants and having more players like Creek Capital who are willing to execute these types of transactions, be it the DeFi rails, and willing to try new things. And just as the UAE government is setting up the vision to regulate this and is able to be agile enough to try these new things and understand that they can benefit, keeping in mind the urgency of getting capital to sustainable projects faster if we are to achieve our climate goals, that this is a way that will empower and that will accelerate capital to be deployed to projects quicker and in turn help us in the long term.
Great, thank you. And David, your final wish for the sector?
To grow.
To grow.
I want a bigger market, so there is no small contribution. So we need everyone to be part of it. So the traditional finances, they still have their place and still in the future. The new finances, like the decentralized finances, we need them.
Yeah.
We need developers, and we need government. So I think that we all need to contribute to make this market grow.
Great, thank you.
Thank you so much, Kate.
And Laurent, last but not least, what's one thing you'd like to see in the next year or two happen?
Definitely, we believe now there is a financing sector being ready to support our industry. What we need are proper regulations to be put in place to help us really to flow the market with projects. The public awareness is there, the industrial sectors, and they are expecting us to come because we are capable to provide competitive solutions to help them to get cheap electricity to reduce their carbon footprint.
Yeah.
Financing is there, now it's regulation, and I think it's happening, so I'm very optimistic actually.
Great. Well, thank you all, and thank you all for joining, and we hope you will continue to pursue this topic as you leave here today.
Thank you.
Thank
All
you.
right, take care.
Thank you.
Bye.
Thank you.
Thank you. Have a good
Thank you,
one.
everyone.
Very
Thank
much.
you.
Oh.